Well, global shares have rallied for the past 2 years. That's been led by US strength. But over the past month, US shares have continued to rise, but Australian shares have diverged negatively. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 23rd of September 2025, and before I start, you do need to be aware that whatever I'm saying is general advice only. So as I mentioned, US shares have been strong. In fact, over the past month, they've ground further into fresh all-time highs, including 3 fresh all-time highs in the past 3 sessions. It really is unbelievable strength from their market. That's despite some negative news, but most importantly, the Federal Reserve has cut interest rates in that time, and they are planning on cutting interest rates further. As long as the Fed is cutting rates, US markets should keep pushing higher. Now, the Fed is cutting interest rates despite fairly strong inflation. In fact, most recent inflation numbers are about twice that of the Fed's target range. But regardless, they're going to cut interest rates because the other economic data is looking fairly weak. Their jobs market's looking really weak. And the Fed does have a dual mandate of, keeping full employment or, stopping unemployment and keeping inflation under control. And at their most recent meetings, they basically said they're going to give up on inflation for now to try and save the economy. That comes after some political pressure from Trump and from the conservatives, and it's basically music to the market's ears. Rate cuts plus inflation, and that'll keep pushing risk asset prices higher. So their strength, it's not necessarily on the back of a strong economy, it's basically on the back of money becoming cheaper, and that money is expected to become cheaper even further. They will get an update on inflation later this week, and that could be a bit of a flashpoint for their market. But we will also see a Federal Reserve speech from Fed Chair Jerome Powell tonight, and that could be a bit more fuel to the fire as well. Like I said though, as long as they're cutting rates, we would expect their market to keep pushing higher in the absence of some sort of shock. For our market though, we've been relatively weak in comparison across the past month. Like I said, we've been closely following the US market higher for the past 2 years, but over the past month or so, something really has sort of shifted. That comes after a pretty poor company reporting season in August. Many of the large listed companies on our market fell after giving their August reports, and that shouldn't be too surprising because despite our share prices rising for 2 years, company earnings in Australia are pretty terrible. Our earnings relative to share prices are basically as low as they've ever been. And so, unsurprisingly, when the earnings reports came in, we saw some investors, look for the exit, rebalance their portfolios, take some profits off the table, and basically, show a vote of no confidence in these companies whose prices have gone astronomical, but whose operational results do not match. I think that's what a lot of it is. Bit of profit taking, some dividends coming out of the market as well, bit of portfolio reshuffling, and that's why we've really lagged the US over this month because we've had a bit of home news come in basically. Now, I don't think this weakness will continue as long as the US keeps rising. If they keep pushing into fresh highs, we will eventually be dragged up with them. And I think that's what we've seen over the past 3 sessions, where our market has closed a little bit higher for the past 3 sessions, and that's because I believe of those 3 successive US all-time highs. We will see some Australian data tomorrow. That's going to be inflation data. That's expected to show a slight gain in inflation to 2.9% year-on-year gain, and after that relatively strong inflation data, the RBA is expected to keep rates unchanged at their next meeting, which is going to be next Tuesday, I believe. Some Australian weakness, partially due to the weak reporting season, possibly a little bit also due to the divergent views on interest rates, where the Fed in the US is cutting and our RBA is keeping rates steady. So looking ahead, as I mentioned, we've got a couple of big inflation readings this week. We've got Australian inflation tomorrow. We've got US inflation data on Friday. We are also going to see a speech from Fed Chair Jerome Powell tonight. I don't know how much the market will react to the speech tonight because they've heard everything they want to hear at the last few meetings, the last few speeches. So instead, I think this week will be all about those inflation readings. A couple of things to also watch for are perhaps, the commodity prices. We've seen gold reach fresh all-time highs, and it looks like it's going to keep pushing higher. We've seen a little bit of life in the iron ore market as well, with iron ore rising for the past few weeks. Maybe that'll translate into some gains for the miners if our market can find some buying. Otherwise though, we're just waiting to see which way our market breaks technically, whether it's going to break to the upside to follow US markets, or whether we're going to see a break of the key support level we found. So let's have a quick look at the charts for this week then. And this is the US S&P 500. As I mentioned, 3 fresh all-time highs over the past 3 sessions, and a couple of all-time highs the week before that. They are on a very strong uptrend, it doesn't look like slowing just yet. If they are to see some selling, maybe they'll come back to the previous all-time high at 6,500 as a potential higher trough. Otherwise though, technically they look further bullish, even if they do look a little bit overbought in the short term. If we have a quick look at the Australian market for this week, and we can see that divergence that I've been talking about, where we've got this sort of downtrend since mid to late August. So that started with the sort of in the middle of the company earnings reporting season. We saw the bad reports, we saw some dividends come out, and we fell back to a bit of a support level right around 87.50. You could draw it as low as sort of 87.40, you could draw it as high as 87.70, regardless it's somewhere around there. We held that support, and then we found some resistance and maybe found a downtrend line. The resistance is roughly 88.80 to 8900, and you can see my downtrend drawn in here. Despite those 3 fresh all-time highs for the US, our market has really struggled to push much higher. We have risen, but we're holding inside the descending triangle here, and we're holding below that resistance there. So like I said, for our market, we're waiting to see which way we're going to break, whether we break to the upside, whether we break to the downside. It's a bit hard to say at the moment. Probably we might have broken to the downside, but the continued US strength is pushing us back up, and that might eventually see us break to the upside. Until then though, we would expect us to head to the point of the triangle, and that would be below the downtrend line, but above these support levels here. So yeah, at this point we're in a bit of a waiting game. We've seen a little bit of a disruption to the uptrend in our market, a bit of profit taking, a bit of rotation, and we're now waiting to see if we're going to resume uptrending, or if this is going to turn into perhaps more of a correction type scenario. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, maybe leave us some love in the comments, and we'll see you guys in the next video.